Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, March 20th, 2024. We're back to having interesting days, not that they ever really stopped, while we follow through on all of this move within this minor fifth wave in the NASDAQ. And today, of course, was really reserved for just the Fed. We didn't have any other economic news coming out today. We had no numbers coming out today until the Fed came on board at 2 p.m. Eastern and announced something that really the market had embraced and already understood, that interest rates would remain unchanged. The algorithms that clicked into power at that particular moment, or just into use at that moment, began to buy the market. And it just kind of kept going. And so I guess that was the plan all the way around, no matter what Powell would say. And in fact, when he started his press conference, he basically just repeated, almost repeated word for word what he stated at the last press conference. And few little changes here and there, just to update numbers, and added some PowerPoint slides on what the rest of the committee was feeling. And no matter what, there really wasn't going to be anything other than just kind of standing there and buying it all back up. And that's pretty much what they did. Now, what I have done here, both in the NASDAQ and the S&P, so I'll review both, is yesterday I had left it that I felt that we had likely maybe completed a fourth wave triangle. And it was a wedge. And I did have conversations with my teacher, as I stated, and then I only got really one comment that said, well, isn't that a conflict? And I said, yes, I agree. It's very rare. And so after all of that, I did spend some time just kind of looking it up, and rare it is. And so I went back and I took another look, and I thought, I'm going to leave it the way I had it. And that was that the 3 completed, and that we did get an ABC clean, and I put the 4 there. And then we started to launch higher in the fifth wave. Now, you can see quite the third wave kind of coming in here today. And so our next resistance line comes in at 18,660, I'm going to call it. And then we have the 100 level, 100% level for minor wave 5 at 18,703. And yep, that will put in a new high, but nope, I don't think it's actually going to finish it. So what I'm looking for here is we're going to get a 1, 2, 3, 4, 5, put the A wave on there, do a B wave, and then still get a C wave up. So I'm thinking by the time this all unfolds, we're going to be going up against a rising trend line on the top, and we're likely going to exceed that and get up towards 18,908 or 18,560, 860, excuse me, 850, 860, up into those areas. And again, we'll be looking at the structure as it gets up there, because remember that within the diagonal, which I know should kind of diagonal a little bit here, all the waves 1, 3, and 5 will be 3 waves, but zigzag. So the overall pattern will be zigzag. And so that's what I'm going to be looking for here. Again, now, just if I take this out of there, bring it down to the hourly, let's see if we can get some of the internals. You can see there's nothing even really breaking. Once the Fed began, it was just straight up. Yep, that was a little pullback, but that was nothing. But that's what you got. From 54, came back down to 410, 411, and then just went up. And then the next one was 496, and that one then dropped back to 470, and then it just went up. And then the bell rang, and all the after hours were just like buy orders, buy orders, buy orders, buy orders. And they actually ran it up to 539. Should be a little higher. Excuse me, 545 was the high, pulled it back just ever so slightly. Now, if that completes, I'm going to drop it again. I'm looking at the 15-minute chart because, again, what I want to look at is like, what was inside this, right? Because don't forget, this all subdivided up. So if we're going to say this is 1 and 2, or 1A, B, and then we get a C maybe, or C maybe. I just see if we put it here, it's going to conflict with there, but not really. So if you know, I say that 1, 2, and then 1, 2, and then 1, and then what all that is, I'm just not sure. So when the market starts to get really squirrely on me, sometimes because it's a 15-minute chart, we just let things not slide, but I go over to my line chart. And then I can see I got 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay, so there's 1. And then we got an A, B, C, B, and then this all comes down in a C wave for wave 2. Doesn't look that way when you go put it up back on the candlestick chart. It looks much more what? But here you can kind of start to make sense out of what the market actually did. So I am going to call this 1, 2, and go back out to my hourly, and that's 1, 2, right? So it's even cleaner here. We get all that fluff and all that, and then we get 2, and then 1, 2, 3. So it's pretty dynamic on this run. So what I would be expecting, if we're going to be calling it 1, 2, and this is a 3, then it's actually within the third. So it's correcting the 3 of the third. They're 3 of 3. Remember, 1, 2. So we're going to put that, if we're going to put that in, then it's 1 of 3, 2 of 3, 3 of 3. So what kind of a pullback could we get there? Well, you're going to run your fibs. Let me put it back out here to the candle so we can get a better grip. This is the 2, and then I'm only looking for the 3. It's going to be pretty hard, but not impossible. I'm going to wrap it up there right at that high. So we're looking at 474, 18,474, 18,430. 382 would be good, and look what that is. See that little tiny blip right in there? That was probably a 4 of 1 lesser degree. Because it's the only, let me just kind of take that out. So I'm going to do it in a second. It's the only pullback we had within there. So I'd have to think that, well, we could probably come down as low as 436. Not all that much, but yes, from 542, it's a 100-point drop. And then go back up, and I'm going to go back out to my hourly chart, and then go back up, because this is actually the level I think that we might be completing this process. So we get a 4 and a 5 to complete the 3, and a 4 and a 5 to complete the ABC up. So, and then, so this would be A, this would be B, and now we're working a C wave to get back up to here, and it should also work out to be 5. So this is going to be 5. That's a 3. And then this 1, 2, 3, 4, 5. And so that's going to be considered wave A. Wave A of 5. Right? Notice these are sub-minuets. Actually, this is minuette. These are minute, so these are sub-minuet that we're working on. And sub-sub when you come down inside this wave. So I'm thinking that maybe the A wave gets up to here, then we do a B wave down, and we'll be able to track it. We'll be able to put the fibs together and to where it can come down, and then we'll do it again. Now, seriously, something to consider is that, remember, I talked about it last night, that we had some cycles that short-term in nature, but they were coming in for a low. And it actually could have been yesterday or today, or towards the end of next week, into the end of the month. It really looks like it kind of came in early. So, the choice is that it's the right-hand translation is like bullish. And that pretty much was in line with what I was expecting out of all of this coming into this week. in terms of counting it out and the declines versus, okay, now we're going to go back up. But notice something very important here. It's all coming in threes, threes, threes. It's just amazing, the number that just everything is in threes. So all that pattern remains intact. And where it ends up should result in, again, we're looking at the degree all the way up at the top, I believe, when it's finished, will be that primary degree. But the kickoff to come back down may be severe, may not be so severe. We're not there yet. So too many things are going to go on between now and then. By the end of the month, as we push into April, we will begin to start first quarter earnings. So it always seems that we're going from one cycle, whether it's the Fed cycle, whether it's the market cycles, or it's earnings cycles. We're always having something that everybody wants to gather around, and everybody wants to put their 2 cents in, and they start speculating on, gee, what the market should do. So it's going to get interesting as we kind of move through this. Is it going to continue to just really show that all the money's being tossed into AI? And who knows? So that's yet to come. Back here in the NASDAQ. Now, we want to go back and I want to look at my hourly chart. Why am I looking? I'm looking at my moving averages. Notice how they really, see, there was that 200 flat as a pancake against this late in the day, really strong rally. But what it did kind of pull up, see what it did? Now we got kissing cousins here because we got the 200 and the 50 going. I'm like, okay, I will go above, because look at how nice the 4, the 8, the 20, and the 50 is angling. So if we get some additional upside, we should get that moved, and then maybe it'll go flat while we do a little bit of a correction and then continue to move up. So again, it's what we were waiting for. As they all start to come back into a line, it does give a boost to the algorithms that come into play on, okay, we're all lined up. We'll just continue to go higher. And they all come in with their buys. All right, over in the S&P. This one also just kind of caught fire. And I did the same thing, by the way. I pulled it back. And here we're on, these are the minuettes. And these are the sub. And so what we're looking at, I had put it in as well and pulled it back out. And this one actually is really kind of cruising very, very strongly. Let me just throw some trend lines on this whole thing. There's wave 1. I'm going to put it onto wave, come on, 3. And boy, it truly is just, this one might actually come out to be to be a slight, slight expanding, which fits, by the way. And let me see, let me go back. Wow, one more. Yeah, wanted to catch that bottom there. And there's the 2 to the 4 and the 1 to the 3. So we got a little bit of expanding, but look where it comes in. Now, so this kind of presents a little challenge here in that, is it an AB? And now we're already in the C, which is 1, 2, 3. Or is it 1, 2, 3 for an ABC? Put in, and then put in a B wave. Because I don't know if I want to consider this a B wave and this a C wave, and here we are, and the S&P is going to be done. That just doesn't fit. So, but here we are honing in on 1.382 for that primary B wave. Now that takes us back, folks. That takes us back, and I'll show you. That takes us back to here. Now, yep, there's a lot of things to discuss, particularly that the angle off of the October 2023 lows is really about a 45-degree angle, straight up, straight up. But C waves, if we're really discussing Elliott, to me, now this is just me, a C wave's closest cousin in Elliott is a third wave. Third wave's most powerful, most often the most powerful, the longest, and the strongest. What's that say about a C wave? In its category, right, ABC, and most often is also going to be the strongest part of the move. And here I am looking at a C wave up. Now, everything else kind of fits. So I still look at the fact that it's on the primary degree, the primary B, and now we're reaching that level. And we could exceed that level. Now, what also needs to kind of go along with this is we have to start to think, well, what else needs to kind of wrap itself around here? Because really, folks, what it does start to come down to is we're looking at wave characteristics, wave personalities, and at what stage of things and what else can be happening along with it. Like, don't forget, within this C wave, within this primary B wave up, we had that Sveg thrust indicator triggered twice. Now that actually has been fulfilled. It's been over fulfilled, to be honest with you, in terms of from when it was triggered, that the market is usually within 15 to 20% higher within, I think they say 6 months to a year after that is triggered. Well, it was triggered last May and last, I think now I can't remember, but it's been that length of time. Plus, and it's gone higher. I think it's like 24% higher. So things are getting met, but yet what I think in terms of like the wave pattern and the characteristics is that what are we now witnessing? Well, we're now beginning to see that now they just brought everything up, but everybody got to participate today because it was ETFs. ETFs coming in and you just kind of buying on the futures. So with that ETF move, the various, everything starts to come up and everything starts to reach targets that have been previously discussed in terms of not just in terms of the futures market, the SPX, the NDX, the Qs, the spiders, the TQs, SQs. There are many different ETFs that are in action now, and they're starting to put together that it looks like, we're kind of in those final stages. And then everybody wants to talk about, well, we got earnings coming up and earnings, everybody's going to be reporting great earnings. It's like, not so quick. I'm going to differ and say, go back to the companies that talked about moving forward, how they were going to see some effects to what's been going on, some effects of different things. And so they started to lower estimates. They started to kind of build in the different things that they were going to have to do. Now, what is kind of keeping it push, artificial intelligence, that sector. When else have I seen a sector just kind of take a market up to a level that at the time was not considered to be sustainable? The pace and then that level. And it would have been, as far as the NASDAQ is concerned, it would have been 2000. And what really happened then, it was the .com bust. Things related to the web, things related to the internet, things related to anything that went there. Companies that began on the internet, put .com after the name and the price of the stock jumped. And then what literally happened at that point, folks, is that the market, the NASDAQ, lost 87% of its value in about a year and a half. So we saw many of these .com companies they're gone. They no longer exist. They're just out of business. And then the ones that were survivable we saw them lose tremendous amounts of their value. But not that they went out of business. But the survivors, they're still there. We have Intel, we have well, that was Facebook, we have Meta, we have Microsoft. So a lot of the companies are still there. And then there's been new ones, and now we have AI. And AI, everybody has to have a chunk of. Everybody has to have some, because that is the future. And so I don't know. So, but I do believe that we are getting very close to not a major crash or anything like that. So please don't misunderstand me. But I think that we're moving into extremely overbought and in some areas extremely overvalued. So, like the Fed talking today on how they intend to trim down their balance sheets, to kind of straighten them out, get them all together. But they don't want to do it too quick. They don't want to do it too harshly, right? It's almost like the Goldilocks and the Three Bears sometimes when you're listening to Jerome Powell. And we just have to do it just right. It's like, okay. Because we don't want to have a hard landing. We want to have a nice soft landing. We don't want to have any landing. We just want to keep going. Okay, so back to the S&P. We're very close, in my opinion, but I don't think that we're done. So that, again, we might get up there, touch that line, finish this portion, label it A of 5, and then come back in the B wave, which, you probably would be fairly solid to say that if we get up to 5,300, 5,307, to drop back 50 points would not be out of the woods, or even 62%. So we're coming back down into here, and everybody will start to wonder, it's over. And we could even challenge the lower trend lines, which is just below 5,200. That all can be challenged in a B wave, and then boom, rally right back up, and then maybe exceed, spike, and then be done. Just a possibility, just a scenario. I'm not saying any of this is actually what will pan out. The market will let us know. But that's where I'm going to finish it up for today. But I do want to start to talk about some other things here, like what is coming out tomorrow on our economic calendar, because now we got to match up with what Jerome Powell was talking about. We have initial jobless claims coming at 8:30 a.m., along with the Philadelphia Fed Manufacturing Survey, also at 8:30. 9:45, we got S&P Flash U.S. Services PMI and the U.S. Manufacturing PMI. 10 a.m., very important, U.S. leading economic indicators. Lately, they've been like, okay, leading indicators have continued to decline while the market continues to go up. Not a perfect match there, folks. That does not jive. And then also at 10 a.m., we have existing home sales. So that's what we have for tomorrow. A pretty hefty round of numbers and data being released from 8:30 a.m. until 10 a.m. I believe more important, initial jobless claims. Actually, the Philly Fed, that's also a good one. And the PMI, the S&P Flash Purchasing Managers Index, they're all important, right up to 10 a.m. and the U.S. leading indicators. All right, that's where I'm going to complete it for today. Our next update will be on Thursday, March the 21st.